Welcome back for another exciting episode of Count Me In. I'm your host, Adam Larson, and today we have a special guest joining us, Dan DeGolier, the founder and CEO of Ascent CFO Solutions. We start off by exploring current use cases of AI in the industry, such as coding transactions and streamlining forecasting processes. But as Dan points out, we're only scratching the surface of what AI can do. The potential for growth and efficiency is immense. But it's important to proceed with caution and be aware of the biases and ethical considerations that come along with it. Throughout this episode, we highlight the evolving role of finance and accounting professionals in the age of AI and how they can adapt to leverage its benefits. From bookkeepers to CFOs to fractional CFOs, AI has the power to enhance efficiency and transform the way we approach financial management. So grab your headphones and join us as we uncover the exciting world of AI in accounting. Let's dive in. Well, Dan, we're so excited to have you on the podcast today as we're going to be talking about AI and fractional leadership. And just to get started, as we think about AI, how is it currently being applied to finance and accounting sectors? And how does it, it obviously does things like enhance efficiency and reduce errors, but how is it being applied in those areas?
Yeah, thanks. Thanks for having me on, Adam. It's a pleasure to meet you. Pleasure to be here. I think we're just getting started for one thing. AI is, even though it's been around for a while, ChatGPT, GPT-4, and all those things are relatively new to the mainstream. And so I think a lot of this stuff we're just starting to figure out right now. Or definitely in the accounting side, we're starting to see some use cases for coding transactions and things like that. I think there's a lot of opportunities in our world in the sort of finance realm when it comes to forecasting to be able to streamline multiple scenarios and make iterations to financial models and forecasts. I think that's an area that we're starting to see develop. And then things like pricing strategy and looking at different ways to price and run different scenarios around that, using large language models and data and being able to bring in data and run multiple scenarios and see what things look like there. I think those are all some areas that we're starting to see. But honestly, I think because it's so early, what is really going to be the biggest use cases 2 years from now is probably something we haven't thought of or somebody's thought of, but hasn't really been implemented yet.
Yeah, I think that's a great point that we're so early in the generative AI phase that some organizations are adapting quickly, other ones aren't, and software companies are trying to integrate it into there, but it's still in the early phases. So our traditional role
is still prone to errors as well.
Exactly.
Yeah, we've all read the articles about the lawyer who tried to use it for briefs and got in huge trouble and the hallucinations are still rampant. So I think proceed with caution, but recognize that it has enormous potential and don't be left behind. I've heard that it's been compared to, if you look at Web 1.0, the emergence of the internet in commercial use, that this could be a 10x type of opportunity from a growth potential, from an efficiency potential, et cetera. It's just fascinating to me just how massive this could be and how life-changing this is.
Well, and also the bias that's implicit in there in the AI, because there's so many biases among how people think, wording that's out the internet and how it's learning. There's going to be that bias that you have to get over as well, because it's going to be embedded in there because of how it is societally.
Correct. Yeah, I agree with that. I think one other ethical consideration that needs to be taken into account when you're implementing AI is things around copyright infringement and intellectual property and protection there. I think the chatbots, aren't necessarily aware of what's IP and protected and what's not. And so I think it's important that we take that there's a human overseeing that and making sure that there's nothing being taken out of context and or being utilized improperly. And along the same lines, research is another area. Tax research and other types of accounting research, I think, is a place where there is a lot of use cases for AI. But again, this is where you have to be very careful around trusting that research and validating that it is accurate, so we don't end up in a situation where something that's not valid is being utilized.
It's going to be very difficult to understand what has been verified and what hasn't. And as you're doing research and as you're looking at things online, there's going to, I imagine new tools are going to have to be developed to verify, yes, this is valid and or no, it's not. And how do you trust those as you go forward?
Yeah. No, I that's really important that there's and there's going to be mistakes made as we start to adopt this. We're going to see mistakes being made, and as humans, we need to learn from our mistakes and learn from others' mistakes. That's how we evolve.
Mm-hmm. Do you think that the traditional roles in finance and accounting are going to change because of these? I mean, obviously they are, but like, how can we adapt as we go forward?
Yeah, I think first thing I would suggest is pay attention to what's going on, see what's evolving, see where things are taking it. I think it's going to definitely change the accounting side, the day-to-day transactional stuff. There's a YouTuber out there, Hector Garcia, who has done some demos of how you can plug in a chat GPT sort of tool into QuickBooks Online, and how that can help ease the coding and of transactions and things like that. So I think it's definitely going to change that sort of bookkeeper and sort of junior accountant sort of role significantly. I think it'll change all aspects of. I think the CFO's desk. I think it's going to still require somebody with experience and knowledge and understanding to validate what's coming out of it, and to just like any other industry. I think there's a lot of need to confirm and double check and be heavily involved at that sort of strategic level. But I think it's going to make things. I think it'll make us more efficient.
Yeah, I definitely agree with that. And as you're talking about things like analysis and looking at it from that higher level, obviously the AI has a better computing power, but we still need that human element. And how does that traditional human analysis going to affect as we look at the output from the AI?
Yeah, I think that it's still going to be critical. I think machines are going to do a lot of the analysis, and it'll find pattern. It's better at pattern recognition than us, especially with large data sets.
Mm-hmm.
But I think when it comes back to that human element of truly understanding and the sort of uniqueness of certain things, it's still going to require a human element. I was thinking about, in preparation for this call, I was thinking a lot about sort of fraud detection, and you got large data sets out there. I think, again, back to pattern recognition, I think AI can be really good at identifying things that stand out and look unusual. You think about maybe purchase orders or sales orders that look unusual, maybe have overrides from managers, and they can look for patterns there where particular users within an accounting system or ERP system might see that something that a particular manager might tend to override things more often, or looking at addresses and zip codes and understanding that there might be some inappropriate payments made that match up to addresses, vendors that match up to, employee addresses or things like that. So they could be bogus, they could be fraudulent. I think those sort of things are going to be a huge area for auditors, and both internal and external auditors starting to use those sort of data sets where that AI tool can go in and start digging around and finding some unusual patterns.
Yeah. So in thinking about implementing AI within your organization, like if you're really considering this, you've done all the research, what are some challenges or ethical considerations that should be addressed when implementing it?
The first thing that comes to mind is security. Right now, I've been reading some things that we're trying to be able to bring it inside, your intranet, bring in those sort of tools inside your intranet, but you don't want to have breaches of data, things that go out, where the chatbot is getting a hold of your corporate data and then utilizing that in the greater universe. And so I think that's going to be really critical, is that we solve for security concerns where things stay within the four walls very clearly. That's the first thing that comes to mind. I think the other one is touched on earlier, which is trusting it too much and seeing that something that comes out of it is just trustworthy, as opposed to it's really validating it, whether that's research around case law when it comes to tax law, or whether it has to do with just what comes out of a financial model and what's practical from a pipeline perspective and things like that when you're forecasting your financials.
Yeah. So as we look to the future when it comes to AI, what are some of the breakthroughs that you think will happen within the finance and accounting industry as we look to the future with AI?
Automation in general, and that can take multiple forms. We touched on the accounting coding of transactions and things like that. I think that's a big part of it. I think there can be a lot more automation around all of the accounting cycles, whether it be payroll, invoicing, accounts payable. I think there can be a tremendous amount of automation on that side. variance analysis when it comes to, your soft close of the books, your initial review of a month-end close. I think there can definitely be a, analysis and digging in a transaction and seeing if looking for those variances to prior periods, variances to budget, variance to forecast, and kind of pulling those out. So I think there could be some automation around that. And then again, on the financial modeling piece, the forecast piece, I think there will be automation there as well.
So one area of expertise that you have a lot of expertise in is the fractional leadership, the fractional executive, and especially the fractional CFO. And as we're talking about AI and the changing of how that CFO looks, how do you see that the ability to have this AI as a fractional CFO, how does that really enhance your ability to help the organizations that you're with in that fractional capacity?
Yeah. Well, at our firm, we're technology first, and we really try. We've always been focused on automation where we can. So I think for us, it's going to be those same types of approaches where we find ways to be more efficient, to be more cost effective, to really implement these tools, identify the best use cases for these tools, kind of trust but verify, make sure that you still got that adult supervision with that AI tool, but, really leaning into it and making it a tool that speeds up data for the C-suite.
Mm-hmm.
I think it's really, the faster you can close your books, the faster you can update your model, the faster you can make adjustments when you see something change with your pipeline. I think more agile a executive team can act.
Mm-hmm. So when you're coming in as a fractional executive, a lot of times that the best place for that model is an organization in transition, right? Mm-hmm. And so that's what I've been reading when I've had other conversations. It seems like it's organizations that's in transition. And when you're in that transition, it seems like you would be looking at all your systems. But, how do you come in and say, hey, I want to have this technology first and utilize these tools, but they have never used those before? How do you bridge that gap?
Yeah, it's an incremental process, right? I mean, when we look at working with a company, they are often going through a transition. They've either, they're looking to raise an additional round of capital. They've recently raised another round of capital. They've got new board reporting requirements. They need better discipline when it comes to forecasting their cash flow. So we're often, if they're a little behind the eight ball when it comes to technology, it's going to be incremental steps, right? You first have to get a really solid ERP or accounting system in place that is trustworthy and fully GAAP, mm-hmm. whether they're audited or not. You want them to be fully on a accrual GAAP basis. And then once you have that, then you start to put in place those data visualization tools. That's something we've been leaning into really heavily the last year or two, is creating really robust dashboards and data visualization that not only show your historical financials, but your forecast and your HR and your payroll and your sales pipeline. And so I think those sort of technologies first need to have really reliable actuals before you can lean heavily into some of the other newer technologies and more robust technologies.
That makes me think of how important it is to have good data, because you don't want to have garbage in and it'll just be garbage out. So you have to really make sure your data is in a good spot.
You don't even want to start to forecast or implement those better tools until your historicals are accurate, for sure. Mm-hmm. And it's not just plain GAAP, financials. It's also what your KPIs look like. What are the real drivers of your business? And that's one of the things we look at when we come into a new client is really take the time to look at the true drivers of the business. They may not be obvious at first. Every company's a little bit different what's driving their growth and their revenue, mm-hmm. and their cash flow. So we really lean into that as a start. We will often start with what we call an assessment phase. We'll spend 20 to 40 hours just really digging in deep to understand every component of the business.
Do you think that all businesses would kind of benefit from some sort of a fractional executive coming in and kind of relooking at things? A lot of times people bring in consultants to do that, but it's just kind of like they look at everything, give you your PowerPoint and head out the door. But that fractional seems to be like that person who kind of partners with you for a period of time.
Yeah, definitely. Our model is based on long-term but part-time. So mm-hmm. we're generally looking at companies in the SMB market. So we're looking at we work with companies between 2 million and 100 million in revenue. And so as that company scales, some companies are too quick to hire a full-time CFO, where they might really just need a full-time controller, a really solid controller and accounting team. And then a fractional CFO for a couple of days a week who's extremely well qualified and very experienced could be a great fit for them to bring in that sort of true executive level oversight with decades of experience to help them navigate, again, what those critical KPIs are, where the holes are in the different strategies that are being considered and things like that. So yeah, companies that are, over 75 or 100 million, very likely to have a full-time CFO, a very qualified CFO. But companies, under 75 million, or depending upon the transaction complexity and transaction volume, companies at that small and medium sized businesses can really benefit from having a top-notch CFO on their team. But it may not need to be a 40-hour or 60-hour a week job. It can maybe be a 20-hour a week type engagement.
So you get that full-time experience, that experienced person there, but you may not necessarily be able to afford the salary that would require to have that person on full-time.
Yeah, and there may not be enough truly strategic CFO level work for that person that you need to have someone on a full-time basis. That's what our whole model is kind of based on. As you grow and evolve, you get the resources you need on a fractional basis. We're made up of, our team is CFOs and VPs of finance and controllers, accounting managers, financial analysts, senior accountants. So we've got a full stack of people with different levels of experience who can come in and support a company during its growth phases. And you kind of pay for what you need, as opposed to having a real heavy fixed cost on your G&A budget, G&A financials.
That seems like a really good benefit, especially for the small to medium-sized businesses. Is it beneficial for like a startup? If a startup is just kind of getting going as an entrepreneur, is it good to bring in fractional folks, or do you think full-time would be more beneficial?
Yeah, I think fractional makes a lot of sense for an early stage company. I look at it kind of as a step function. You start out, maybe you just need a part-time accountant to make sure things are being coded properly. Once you have revenue and you're ready to raise a round of capital, then you probably want a strategic fractional CFO or VP of finance who can help you with that capital fundraise, help you with that, with a really robust financial model and understanding what your KPIs and drivers are. And then over time, you start to fill in some of those roles on a full-time basis as you get a growth cycle. So, it's not uncommon. You start with a fractional senior accountant and a little bit of oversight from a fractional controller. And then that evolves into, a full-time, one or two full-time accountants, and then a fractional CFO. And then eventually you get a full-time controller, and it just kind of builds as you go up the ladder in revenue and fundraising.
So this is not have to do with fractional CFO, but I want to throw this question out there, and you feel free to answer it or not. But do you think that the evolution of AI will help bridge the gap between US GAAP and IFRS to make it a more international accounting standards?
I think it definitely has potential to. I think that they are, there's logic in the way that things like RevRec and other things are being handled between IFRS and US GAAP. So I think there's definitely some good potential there.
Yeah. I don't know, because I just feel like as we become a more global world and how we do business and everything, it would make more sense to have a globally recognized accounting standard so that everybody's has the same kind of standards that they live up to. Obviously, different countries have different beliefs and stuff like that, but it would make sense for us to think globally.
Yeah, I like that. I hadn't given that a lot of thought before, but that does make a lot of sense to me.
Well, Dan, I want to thank you so much for coming on the podcast. It's been great talking with you. Thanks so much for sharing your knowledge and expertise with our audience.
My pleasure, Adam. Really was fun to meet you and fun to discuss these emerging technologies with you.
This has been Count Me In, IMA's podcast, providing you with the latest perspectives of thought leaders from the accounting and finance profession. If you like what you heard and you'd like to be counted in for more relevant accounting and finance education, visit IMA's website at www.imanet.org.